From the floor of the CME Group, this is Danny Riley with today's MrTopStep update. You know, over the last couple of days, what's been going on in the Middle East with Gaddafi and his forces trying to take over some of those refineries was front and center here down in the S&P and in the crude oil markets. But this morning, the big headline, as we all know, is the earthquake and the tsunami that occurred in Japan overnight. You know, this has been a really big factor of the way the markets have been moving around this morning, but as what we're seeing now is there's a very good bid to the S&P. In fact, we're on the highs of the day. Now we want to go back and talk about a couple little things. What we're going to do is we're going to shoot up a 10-day chart of the S&P and a 10-day chart of the April crude oil. And you know, as of last week, the S&P made a high of 31.75, and as of this morning, that's in the June contract, we got down to 12.78.5. That's a 54 handle down move, okay? And the crude last week, we made a low at 96.37. We made a high of 106.95. That was a $10 rally. And then after we made that high, we just made a low today down at 99.01. That's an $8 sell-off. Now, you know what? Traders down here love volatility. We know that the big hedge funds, all these prop groups, they love getting involved in all this kind of price action. But you know what? It creates a mammoth amounts of losses when people have to roll up, roll down. And as we go into this expiration, we want to keep in mind a couple of things. One, the pit bulls rule about a low the Thursday or Friday before the expiration. Two, we also want to look at the expiration stats, and we'll also be flashing those up that show that the March expiration study shows an up week. Now, as bad as the markets look here, we want to keep in mind that as long as the Fed and their POMO program is still here, it is more than likely going to support the markets on the downside somewhat. You know, as we come down, obviously there's a lot more enthusiasm about selling this market with it being up on the highs than there is buying it. But that said, you know what? We're still kind of caught in this kind of back and fill motion, and we haven't broke down through any of these key levels. One that we're looking at is the 1277 level, which is a key level, and another level, and I'm going to put this up for top notch. He had a level that he put out at 1284.40 last week, and overnight we got down to 1283. And he's also saying that the markets may end up going higher here. As far as the rest of the floor is concerned, we've had a decent trade in the Euro options and 10-year note options, but it's kind of slowed here, and everybody's eyes are on the S&P. We want to thank everybody, the CME. We want to thank Ninja Trader for helping us out with our charts. And we'll be back on Monday with another MrTopStep update.